Hey guys, welcome to the video. My name is Sam, and on this channel we talk about personal finance, stock investing, gift cards, saving money, all in all. And today I want to talk about the big 5 misconceptions of the stock market. So let's get into it. The number one big misconception is stock price does not equal valuation. That means that if a stock A is worth $10 and stock B is worth $100, then stock B is 10 times more valuable than stock A. That's not what it means.
So we're going to go through a quick example. Let's assume there's two companies. There's company A who's worth $100 and company B that's also worth $100. And if company A broke out its company into 10 shares, each having a value of $10, and if company B broke out its shares into 100 shares and each share having a value of $1, there's two statements here. The first statement is that company A's stock is worth 10 times more than company B's stock. So you can see that one stock or one share is worth 10 times of what company B stock is worth. What's false and what most people say is that company A as a whole is worth 10 times more than company B as a whole, and you know that's not true because company A and company B are both $100. Now the other way to calculate the value is using enterprise value, but first we're going to talk about market capitalization. Market capitalization refers to the total dollar market value of a company's outstanding share of a stock, commonly referred to market cap, and it's calculated by multiplying the total number of a company's outstanding shares by the current market price of one share. So the simple way of doing it is there's a formula: market cap equals to share price times the number of shares outstanding, meaning that's out there in the market. And we can look at just Apple really quickly. Apple's a really big company. It has a market cap of $2.27 trillion. Tesla, on the other hand, big company as well, and not as big as Apple, having a market cap of $783 billion. And both Apple and both Tesla recently went through a stock split. Apple went to a 4-to-1 stock split. Tesla went into a 5-to-1 stock split. And just because they went to a stock split doesn't mean that Apple just became 1/4 of the value. Okay, just the stock price did, but the market cap was still the same.
The second big misconception is the price of the stock itself. Now, the price of the stock, there's actually 3 prices. There's a bid price, an ask price, and a last price. And we'll get into each one.
Now, the other way to calculate the value is using enterprise value, but first we're going to talk about market capitalization. Market capitalization refers to the total dollar market value of a company's outstanding share of a stock, commonly referred to market cap, and it's calculated by multiplying the total number of a company's outstanding shares by the current market price of one share. So the simple way of doing it is there's a formula: market cap equals to share price times the number of shares outstanding, meaning that's out there in the market. And we can look at just Apple really quickly. Apple's a really big company. It has a market cap of $2.27 trillion. Tesla, on the other hand, big company as well, and not as big as Apple, having a market cap of $783 billion. And both Apple and both Tesla recently went through a stock split. Apple went to a 4-to-1 stock split. Tesla went into a 5-to-1 stock split. And just because they went to a stock split doesn't mean that Apple just became 1/4 of the value. Okay, just the stock price did, but the market cap was still the same.
The third big misconception is how to buy a stock. Now, you don't just buy a stock or sell a stock. There's an order type, and there's also duration of that as well. So it's you have to have it a little bit customized. So you can't just tell one, I just want to buy a stock. You got to be a little bit more specific, and we'll get into how specific you need to be.
So when buying a stock, it's not as easy as just saying you want to buy it. There's a couple of order types. So in this example, we're back in the question account. You can see order type, and there's a market order. Market order, if you hover it over, you can see a market order is an order that you buy or sell a security at the price currently available. Meaning that if you want to buy it, you're going to be buying at the lowest ask price. If you sell it, you're selling at the highest bid price. Again, those are the two prices that we mentioned right here. You'll be buying at this price and you'll be selling at this price over here. Market is with a limit order, you are determining your own price. So you can specify what price. Say you want to buy it at only at 135. Okay, so right now it'll be entered and it'll be entered at the specific bid price. You won't be able to see it here, but then it'll be when it hits your bid price of 135, then it'll trigger. And there's other orders as well. There's what's called a stop order, and usually this is used for when selling a stock and selling it when it drops too low, it will then trigger as well. So there's a few other orders here. There's a trailing stop limit, there's a stop limit, and many others. It's something worthwhile to look into as well.
Number four, the fourth big misconception is that the market is open from 9:30 to 4 o'clock. Now, it is true that the market is open from 9:30 to 4 o'clock, but there's also something called the pre-market and the aftermarket. So, after hours market. So you can see here, most investors know that the major stock market, the standard hours are between 9:30 to 4 o'clock. But for the New York Stock Exchange and the NASDAQ, there are pre-market and there's also after-market trading. So the three stock trading sessions would be: pre-market is from 4 a.m. to 9 a.m. Eastern Time. Regular market, again, we just mentioned, it's 9:30 to 4. Aftermarket, okay, happens at 4 p.m. to 8 p.m. Eastern Time. So this is for, again, the New York Stock Exchange and the NASDAQ. Now for the Toronto Stock Exchange, it's a little different. You can see here, the Toronto Stock Exchange, its pre-market is 7 a.m. to 9:30. And that's for pre-market. And then market opens 9:30 to 4 o'clock. And between 4:10 to 4:15, the post market is cancelled. You can see that it's cancelled from this time. It only continues from 4:15 to 5 p.m. So on the Toronto Stock Exchange, it's a lot shorter in terms of trading hours than the New York Stock Exchange and the NASDAQ. And the fifth and the last misconception about the stock market is the exchanges. Now, there are many exchanges. It's not just the New York Stock Exchange. It's just not the NASDAQ, not just the Toronto Stock Exchange. There are a few other ones as well. They're not as popular, but you do need to keep in mind that if the company that you want to invest in is on a different stock exchange, some of the brokers might not carry that stock exchange, or it might have a different fee. So just something to be aware about.
So in terms of different stock exchanges, there's the three biggest one in North America. There's the New York Stock Exchange, there's the NASDAQ, and then there's also the Toronto Stock Exchange that's not listed here for some reason. So the Toronto Stock Exchange is the TMX, Toronto Stock Exchange. And on top of that, there's something called over-the-counter, OTC stocks. OTC stocks just means that they're not traded formally on these three exchanges. They're traded privately through your dealer broker, meaning that if you have a broker, your broker have to carry these stocks in order for you to trade them. So one example of a stock that's over the counter is Nintendo stock. You can see here, if you want to trade Nintendo, you'll have to trade it through the pink sheets, which is over the counter, and the liquidity is just the volume and liquidity is just a lot lower. It's a lot less available to trade to buy this company, and usually over the counters are just stocks that are, again, they didn't go through the formal process of being on the exchange, and they're usually a lot lower in stock prices. Usually a lot of penny stocks are in the over the counter stocks.
And with that said, thank you for watching. I hope you guys learned something today. Hope you guys are a little bit more informed about stock prices, about order types. And just because a stock has a higher stock price does not mean it's more valuable than another stock. And with that said, I'll see you guys in the next video. Take care. Bye.